Hello and welcome to our capital market presentations proposed by Recehan Investment. This project is prepared by Rafli Laksamana, Zahra Nadindra, Fadhlan Yazid, Maheswari Waranggani, and Najiyya as part of our capital market course. Recehan Investment is an asset management firm founded on a simple belief. Everyone deserves the opportunity to build a better financial future, regardless of how small they start. In an increasingly complex capital market environment, we aim to make professional investing more accessible, transparent, and inclusive, especially for individuals who are beginning their investment journey. Our vision is to become the most trusted and inclusive investment partner, empowering individuals to build sustainable wealth starting from even the smallest contributions. To achieve this, our mission focuses on democratizing investment access, educating and empowering clients through clear insights and financial literacy, and ensuring sustainable growth through disciplined and responsible investment strategy. Transparency, integrity, and innovations guide every decision we make. Through this presentation, we will illustrate how Recehan Investment applies capital market analysis, portfolio management, and risk assessment to transform small investment into meaningful long-term value.
Our investment objective is to achieve capital gains through active equity investing while maintaining controlled risks. We focus on individual stocks listed on the Indonesian Stock Exchange. To achieve this, we identify mispriced or undervalued stocks by combining fundamental analysis, such as valuation, profitability trends, and margin of safety, with technical and market timing indicators to improve entry and exit decisions. We also apply active portfolio management through sector diversification, transaction cost control, and periodic rebalancing. Risk awareness is a key priority, where we monitor market volatility, sector dynamics, and macroeconomic conditions. Overall, the portfolio is reviewed on a weekly basis to support disciplined decision making and continuous strategy improvement.
Okay, now I'm gonna explain my company investment strategies. Recehan Investment Portfolio adopts a value-oriented and active investment strategy focused on equities listed on IDX or Indonesian Stock Exchange. Now, to achieve our investment objectives, we employ a hybrid strategy that's balanced potential growth and market momentum. The strategy emphasizes identifying mispriced or undervalued stock through a combination of fundamental valuation, earning analysis from financial statement, and selective market timing. The core strategy is value investing with a margin of safety, where investment decisions prioritize companies trading below their estimated intrinsic values. This includes screening for attractive valuation multiples, sustainable profitability, and sound financial structure. For us, potential opportunities come from stock with temporary price dislocation caused by market overreaction, cyclical downturns, or short-term negative statement. For your information, stock selection is conducted using a bottom-up approach, which focuses on analyze the performance of individual issuer rather than general macroeconomic condition. In addition, the Recehan investment portfolio incorporates an opportunistic and tactical allocation approach, allowing flexibility to adjust exposure across sector and individual stock in response to changing macroeconomic condition, interest rate dynamics, and market sentiment. Now, how about risk management? Risk management is embedded throughout the strategy via diversification across industry, periodic portfolio rebalancing, and position sizing discipline. Continuous monitoring of company fundamental and macroeconomic indicator ensures that downside risks are identified early, that capital is reallocated efficiently when investment desks are.
Our investment approach is based on a value-oriented philosophy. We focus on fundamentally sound companies that are temporarily mispriced due to short-term market overreactions, cyclical movements, or shift in investor sentiment. Investment decisions are driven by bottom-up fundamental analysis, where intrinsic value is assessed using profitability trends, earning sustainability, valuation multiples, and margin of safety. Fundamental analysis is supported by selective market timing using technical indicators to optimize entry and exit points. The portfolio is actively managed through continuous monitoring, regular rebalancing, and prudent positioning sizing. Risk is controlled through diversification and macroeconomics awareness while maintaining upside potential. Beyond performance, this approach also helps develop investment judgment and analytical discipline.
On this slide, we present the screening strategies applied by Recehan Investment throughout the 12-week investment period. First, in terms of stock selection, we implemented a top-down market screening combined with stock-specific analysis, focusing on a short-term momentum-oriented strategy. The portfolio covered multiple sectors, including materials, FMCG, technology, and infrastructure, represented by stocks such as Antamo, LTJ, AMRT, Buka, MTK, Inet, and KTR. These stocks were selected due to their active trading patterns, liquidity, and strong short-term price movements. Second, for portfolio development, the portfolio started with an initial capital of 5 million rupiah, with 70 to 85% allocated to equities and the remaining portion maintained as cash. This structure allowed active rebalancing while preserving flexibility. Cash holdings range from 200,000 rupiah to approximately 3.2 million rupiah, reflecting disciplined liquidity management. Third, the determination of the number of shares followed strict position sizing rules, where each stock represented 10 to 25% of total portfolio value. Transactions costs were also considered, with buying fees of 0.15% and selling fees of 0.25%, ensuring accurate performance measurement. As a result, the portfolio achieved a final asset value of 8.93 million rupiah, generating a total gain of approximately 3.933 million rupiah, or around 78.6% growth. This performance was primarily driven by high-performing stocks such as KTR, Inet, and MTK, supported by disciplined rebalancing and effective cash management.
For week 8, the portfolio started with an initial value of 6.3 million Indonesian rupiah and increased to 6.53 million Indonesian rupiah by the end of the week. This resulted in a weekly gain of 3.6%, equivalent to approximately 202,000 Indonesian rupiah. The performance was mainly supported by momentum-driven stocks, while the portfolio also maintained sufficient liquidity, with cash holdings of 1.82 million Indonesian rupiah at the end of the week. In week 8, the portfolio applied an opportunistic positioning strategy. The main focus was to capture short-term momentum opportunities while still maintaining diversification across sectors to manage risk under mixed market conditions. The portfolio initiated a buy position in Inet after the stock showed strong upward momentum. The share price increased from 430 to 510 IDR, generating a weekly gain of 15.7%. This decision was driven by favorable short-term sentiment and momentum signals with the objective of capturing upside potential while the trend remained intact. KTR was retained after recording a 9.5% weekly gain. The stock continued to show strong short-term momentum, supporting the decision to maintain exposure in line with the portfolio's return optimization strategy. ANTM was also capped after gaining 4.61%. It served as a stabilizing component in the portfolio, providing diversification and exposure to improving sentiment in the commodity sector. OLTJ experienced a weekly decline of 4.96%. Despite the correction, the position was retained as the downside remained manageable and the stock continued to play a defensive role within the consumer staple sector. MTK also declined by 3.7%. The position was maintained because the drawdown was limited and the stock still offered recovery potential, while contributing to diversification in the technology and digital media sector. Beuka or Buka was partially sold during the week. One tranche was realized after marginal price appreciation, while the remaining position was retained. This decision was taken to lock in short-term gains and increase cash availability, while still maintaining exposure to the digital sector in anticipation of potential price recovery. In summary, week 8 reflects an effective opportunistic strategy. Gains from momentum-driven stocks, such as Inet and KTR, successfully offset losses from underperforming positions. Partial profit-taking in Buka strengthened liquidity, resulting in a balanced outcome between return optimization and risk control under mixed market conditions.
For week 10, covering the period from 24th to 28th November 2025, the portfolio recorded a strong positive performance, supported by broad-based price appreciations across several holdings. At the beginning of the week, the total portfolio asset value was around 6.7 million rupiah, and by the end of the week, it increased to approximately 7.2 million rupiah. This represents a weekly gain of about 500,000 rupiah, or roughly 7 to 8% return, indicating effective short-term position and momentum capture. In terms of performance contribution, PT Ketros dan Trias Mitra Tbk or KTR was the main driver of portfolio growth. The stock posted a strong weekly gain of around 20%, generating an unrealized gain of over 300,000 rupiah. In addition, Sinergi Inti Andalan Prima Tbk or INAT and PT Ultra Jaya Milk Industry Tbk or ULTJ also delivered solid performance, with weekly gains of around 17% and 6% respectively. These positive contributions more than offset the moderate decline experienced by Elang Mahkota Teknologi Tbk or EMTK, which recorded a short-term correction of about 3% during the week. From liquidity perspective, the portfolio remained in a strong position. By the end of the week then, cash holdings were close to 2.7 million rupiah, mainly supported by profit realizations from the sale of INAT. This level of cash provided sufficient flexibility for future tactical adjustment while also helping to mitigate downside risk. Regarding rebalancing actions, portfolio decisions were based on short-term price movements relative to the initial weekly valuation. The main sell actions involve INAT, which was exited after a sharp price increase from the mid-500s to around the mid-600s. These transactions generated a realized gain of approximately 150,000 rupiah, after accounting for transactions cost. The position was close to lock-in profits and reduced the risk of short-term price reversals. Meanwhile, several positions were maintained to preserve diversification and portfolio stability. Antam was retained as its price remained relatively flat, continuing to act as a stabilizing exposure within the material sectors. ULTJ was kept due to its steady upward movement, reinforcing its role as a relatively defensive customer's staples stock. Buka was maintained despite only marginal gains, reflecting a cautious stance towards the technology sectors, while MTK was held despite a short-term decline as the downside remained manageable and recovery potential remained intact. KAETR, despite its strong performance, continued to be held to capitalize on its ongoing price momentum. Overall, Week 10 reflects a balanced strategy between short-term return optimization and prudent risk management. While the portfolio benefit from high momentum stocks such as KAETR and INAT, exposures to small cap stocks implied higher volatility, emphasizing the need for continuous monitoring. The relatively high cash positions strengthen portfolio flexibility, supporting a forward-looking strategy focuses on selective profit taking, disciplined exposure management, and maintaining resilience against future market movements.
Okay, now we're gonna move to individual analysis, week 5. In summary, this week was a testament to our portfolio resilience. Despite significant volatility in the technology sector, which is Elang Mahkota Teknologi or AMTK, the portfolio remained profitable, delivering a modest net gain of 0.3% after transaction costs. This positive outcome was the result of balanced strategy, aggressive profit taking in the retail sector to offset drawdowns in high beta holdings. Now, we're gonna move to the AMRT. Okay, the highlight of the week was the decision to exit PT Sumber Alvaria Trijaya or AMRT. On October 23, I execute a sale decision, locking in a realized profit of 70,000 rupiah. You might ask, why sell a performing assets? This was a macro-driven decision. We identified a decline in consumer purchasing power, which posed a risk to net income and EPS growth for retail issuer. Consequently, the initial thesis for capital appreciation was no longer robust, and we chose to secure our gains opportunistic. Now, we move to the Ultra Jaya. This stock performed exactly as intended. It posted an unrealized gain of 2.93%. Its stability validates our thesis of holding low beta assets to mitigate overall portfolio volatility. Now we move to Aneka Tambang or ANTM. Although the price remained flat, zero change, I maintain the position. We view this lack of movement as a consolidation phase and continue to hold ANTM to preserve exposure to the material sector and commodity price. Now we move to the this one, EMTK or Elang Mahkota Teknologi. This stock suffered a sharp correction of mean 13.2%, which is this one, which loss of 58,000 rupiah. This decision, I decided to hold this one because selling at this level will actually a substantial loss. Since the position size is controlled, the strategy has pivoted to wait and see approach, avoiding a panic exit during a dip. Now we move to Bukalapak. Similarly, Buka experienced a moderate loss of mean 1.82%. I maintain that this position as the drawdown is viewed as being with acceptable volatility limits for a touch constituent, and I am waiting for potential revision. So in conclusion, the sale of AMRT has left the portfolio with high liquidity, approximately 2,200,000 rupiah in cash. This provides significant flexibility for tactical reallocation the upcoming week. Thank you.
And now I want to show you my analysis for our second week portfolio performance. Let's start with the quick overview. Week 2 marked a control expansion phase for the portfolio. During this week, we added an additional capital, which is 1 million rupiah, and it increased liquidity and gave us more flexibility in managing the portfolio. This additional capital allowed selective deployment into momentum-driven opportunities while keeping overall risk under control. And by the end of the week, the portfolio closed with a positive unrealized performance, supported by gains in selected stocks, while downside risk remained contained. In week 2, the portfolio implemented a selective entry and holding strategy, supported by the additional capital injection. The main action during this week was the initiation of new position in EMTK. EMTK was purchased at an average price of 1,300 per share, and by the end of the week, the price increased to 1,500 rupiah. This resulted in unrealized gain of approximately 80,000 rupiah, or around 13%. The entry was driven by strong short-term momentum and improving market sentiment in the technology and media sector. EMTK responded positively within the same week, making it the main contributor to weekly returns. So looking at the overall, several positions contribute positively during this week. AMRT recorded as a solid gain of 80,000 rupiah, or around 4%, supported by stable consumer demand and its defensive business model. And Bukalapak also delivered a moderate gain of around 4%, following a short-term rebound in technology-related stocks. And on the downside, Antam experienced a slight decline of around 0.3%, while ULTJ recorded a loss of 2% after a mild correction. However, these losses were limited and remain manageable, and overall, week 2 showed positive portfolio performance driven mainly by the MTK entry and solid gain from AMRT, while risk stayed under control. And finally, from the screening perspective, EMTK was entered based on the clear momentum signal, and the stock responded positively within the same week, validating the entry timing. For holding decision, AMRT and ULTJ were maintained for their defensive characteristics and consistent fundamental. Bukalapak was held for its upside potential despite high volatility, while Antam was retained as a commodity exposure to support diversification. After the capital injection, the portfolio ended the week with we can say healthy cash balance. The liquidity was intentionally preserved to avoid overexposure and to maintain flexibility for future opportunities. And overall, the portfolio remained balanced, disciplined, and well-maintained, well-positioned moving forward. Thank you.
Okay, so for the individual analysis itself, I analyzed the first week, and as we can see in here, we can see the Recehan portfolio on the first week on its opening position and closing position. On the first week, which is around 22nd and 26th September 2025, the portfolio was initiated its first round of equity exposure by entering 4 positions, which are PT Aneka Tambang or Antam, PT Ultra Jaya Milk or Utra, and PT Sumber Alvaria Trijaya or Alfamart, and also the last is PT Bukalapak.com or Buka. The portfolio construction itself, its initial portfolio value was 5 million rupiah, ending a portfolio value of 4,964,902 rupiah, and the cash position was 219,802, which is approximately 4.43% of the asset value. The stock allocation and weekly performance shows that on the first week, Antam gained about 0.6% of a gain. Ultra does not change anything. Alphamart shows a loss of 0.8%, and lastly, Buka also shows a loss on 1.2%. Here we buy the Alphamart. Alphamart was the largest allocation in the first week and closed the week with an unrealized loss of 1,500 rupiah, equivalent to a minus of 0.8%. The stock was retained based on its defensive nature within the consumer staples sector and expected a resilience in upcoming periods. Secondly, we also buy the Bukalapak. Buka recorded an unrealized loss of 11,800 or a minus of 1.2% by the end of the week. Despite this early decline, the position was held as the risk remained within the range and the stock was still considered as a potential rebound candidate. The third one is Antam. Antam contributed a modest gain of 9,000 rupiah or approximately about 0.6%. The uptick aligned with the stable commodity pricing and early speculative interest in metal-linked stocks. While not a major contributor, this small gain helped to offset some pressure from the tech side and added diversification value. Lastly, we also buy the Ultra Jaya Milk Industry. Ultra closed flat with no change in price during the week. The position serves as a low beta anchor with the portfolio providing exposure to defensive consumer names. Its stable price confirmed its role in maintaining a balance and limiting volatility during the initial deployment phase. From all of the four stocks that we buy on the first week, the total portfolio value at the end of the first week was 4,964,902 rupiah, which includes an equity component of 4,745,102 rupiah and a remaining cash of 2,198,802 rupiah. This reflects a minor loss of 35,098 rupiah from the initial capital of 5 million. While the week closed with a slightly negative return, no realized losses occurred since all the positions were held. The portfolio stayed full invested, with early adjustment deferred to observe initial price behavior and validate short-term market assumption. Okay, so for the weekly allocation itself, throughout the 12 weeks, our allocation decisions were always strategic. In the early weeks, we leaned on a stable consumer like Alfamart and Ultra, keeping enough cash for flexibility. In the second week, we went fully deployed, even dipping into a negative cash to take a timely entry into EMTK as a tech showed early momentum. And by the week 5, we took profit from Alfamart and shifted toward a more cautious stance, raising our cash to over 35%. That wasn't idle. It prepared us for a sector rotation. In the week 7, we added KETR based on a structural view of digital infrastructure, and later INAT joined to deepen our exposure in that theme. By the final weeks, the portfolio had tightened into a more balanced structure. KETR led performance, Ultra and Antam provide stability, and cash remain healthy for flexibility. Every move had a reason, driven by analysis, not impulsive, and that's what gave our portfolio its edge. And here we can see some important week allocation. On the first one is the first week. In the first week, the portfolio leaned heavily on Alfamart at 37.8%, showing a strong early conviction. Buka, Antam, and Ultra were evenly weighted, offering a mix of growth and stability. Within just 4.4% in cash, we took a bold momentum-driven entry from the start. Second one is on the week 5. In week 5, the portfolio turned defensive. Cash jumped to 45.9% after exiting the Alfamart and likely trimming Buka. It wasn't a panic, just a move to protect gains as volatility increased. Antam, Ultra, and Buka held equal weight, while EMTK stayed with a smaller role. The shift showed a clear pivot towards a caution. The third one was on the week 8. In week 8, the portfolio reached its most diverse point. New entries like Inet and Sita added to the telecom and logistic exposure, while KETR held a strong 17.6% weight. Antam, Ultra, and a Trim Buka stayed in play with a 27.9% in cash. We kept the flexibility while moving from exploration to a more focused strategy. Lastly is on the 12th week, by the week 12, the portfolio had settled into a more conviction-driven structure. KTR led with 36.7%, reflecting a strong belief in its long-term potential. Cash remained high at 39.5%, showing a clear choice to stay flexible. Antam and Ultra held steady for stability, while Buka had been trimmed. At this stage, the focus shifted from rotation to holding quality and waiting with purpose. Next is what you can see is the graph of cash and invested asset. The chart clearly shows how our strategy shifted from full deployment early on to a more balanced approach starting by week 5. The spike in cash after exiting Alfamart and trimming Buka wasn't about a fear. It was a tactical pause rather than forcing the entries. We held back and let the market come to us. This reserve turned into an edge by the week 8 when we deployed into Inet and expanded KETR at better levels. Cash here wasn't a passive, it was a tool for control. And next is what you can see is the weekly and cumulative performance. Over the 12th week, Recehan Investment posted a 79.92% return, which is a strong for such a short period. The high CAGR reflects a steady week-to-week gains, not just one-off wins. Early momentum in week 2 gave us a strong start, and a key surge in week 12 sealed the overall performance. Compared to the benchmark, we clearly outperformed while IHSG dropped over 28%. Nikkei slipped slightly and S&P 500 barely moved. What made the difference was active management and a smart pivot, not just riding the market. So now we're going to move to the weekly and cumulative performance. Here on the left top side, we can see the cumulative return. In this chart, it shows that Recehan Investment pulled ahead of all benchmarks starting from the week 3 and never looked back. While the indices mostly moved sideways, our portfolio kept growing through consistent and well-timed decisions. The gap between especially clear after week 10 and the final surge by week 12 locked in the outperformance. It is also worth noting that our gains didn't come from a bullish market trend. IHSG and other stayed flat and dropped. This result came from the internal allocation and choices and fast rotations, not from riding the market. And on the right side, on the top right side, we can see the weekly return. The weekly return chart highlight how Recehan Investment embraced a higher volatility to capture stronger gains, where week 3 kicked things off with a major 20% spikes, and while returns fluctuated after that, the portfolio stayed ahead through active moves like new entries and timely exit. While week 12 added another big boost and solidified the lead. Compared to the benchmark, which moved in smaller, steadier step, Recehan's performance was more aggressive, but also more rewarding. The high standard deviation shows this wasn't a passive, it was a result of a fast and calculated positioning. And on the left bottom side, we can see the risk and return precision, where the return and risk chart make it clear that Recehan Investment took a very different path than other benchmark. While IHSG, S&P 500, and Nikkei clustered in low risk and low return zone, Recehan stood out with the highest return and highest volatility. This reflects an intentional strategy that prioritizes active positioning over passive tracking. What's the key here is that the risk taken wasn't wasted. Unlike IHSG, which had a similar volatility but negative return. Recehan's approach delivered meaningful result, proving that when managed well, higher risk can actually work in your favor.
And lastly, we can see on the risk and return table here, the table shows that Recehan investment had the highest return at 5.73%, but also carried the highest risk at 7.81%. This reflects a clear choice to prioritize growth over stability. Unlike IHSG, which took only over 2% risk but only 0.63% return, Recehan turned its volatility into meaningful gains. Nikkei and S&P 500 were more conservative with lower risk and lower return. Overall, the data highlights that Recehan's higher risk was justified and efficiently managed, proving the value of active decision making.
The result shows that Recehan investment delivers the strongest overall performance. It records the highest Sharpe ratio and Jensen alpha, indicating superior exit returns relative to both total risk and capital asset pricing model expectation. Recehan investment records a negative trade-off ratio as a consequence of its negative beta, indicating that it moved inversely to the market, which makes the trade-off ratio less suitable for evaluating its performance. Besides that, the Sharpe ratio results indicates that Recehan investment has the best overall risk-adjusted performance, as it generates the highest exit return relative to the total risk. This shows strong efficiency in converting volatility into returns. And for the last one, with the risk-free rate 0.118%, Jensen's alpha results shows that Recehan investment significantly outperformed capital asset pricing model expectation, as reflected by its large positive alpha. This suggests strong performance beyond what is predicted by its systematic risk.
Okay, now we're gonna move to calculate NAV. How we calculate NAV or net asset value. This mechanism is critical for ensuring transparency and fairness for all unit holders. Now, we have prepared a scenario analysis based on our portfolio evaluation at week 12 to demonstrate this process. In this scenario, we have a potential investor looking to subscribe an additional 100 units. So the question is, at what price should these new units be issued? We adhere to customary mutual fund valuation procedures. At time of subscription, the fund report 5,000 outstanding unit and a total net asset value of 8,931,31,258,000 rupiah at the subscription date. Now we're gonna move to the pre-subscription NAV. The NAV per unit prior to the subscription is calculated as follows. By dividing total asset by total units, we derive a pre-subscription of NAV of 1,786.25. This value represents the fair price at which new units are issued. Now, we're gonna move to subscription value. Based on the valuation, pre-subscription NAV, the total capital contribution required from the new investor is 100 multiplied by NAV per unit. So the result is 168,625,000 rupiah. This calculation of new investor total capital contribution. Then this value is immediately added to the fund as a new asset. So, following the capital injection before, our portfolio metric is now total asset under management is 9,100,098,3,000 rupiah. Now, the calculation of new total asset under management is 5,000 plus 100. That the result is 5,100. This is the calculation of new outstanding units. We're gonna move to the next slide. Now, I think this is the most critical for fiduciary responsibility, the verification. We must prove that issuing these new units did not dilute the value held by our existing investor. Now we recalculate the post-subscription NAV per unit by taking the new total asset under management, which is 9 million, and dividing it by new total units, this 5,100. So the result is 1,786.25 rupiah. This is the calculation of post-subscription NAV per unit. So Since the NAV per unit remains constant before and after the transaction, we have verified that the deal was conducted at a fair value. It confirms that proportion ownership is maintained and the value current unit holders has not been reduced.
So in conclusion, Recehan Investment has lived up to our slogan, from spare change to big gains. We turned our initial capital of 5 million rupiah into 8.9 million rupiah. And this number is nearly 80% growth in only 12 weeks, which far beat the local and global benchmarking. By using a value-oriented strategy to pick stocks like Qatar, Inet, we achieved the highest risk-adjusted return among all the benchmark. So that's all from us. Thank you.